Let's talk about PTC India Financial Services. The stock is down big time. In fact, double-digit decline is what it's seeing in today's trading session. And that's majorly on account of the Q4 numbers, wherein the NII has declined 27.6%. And not only that, on the bottom line, the company has delivered a loss of 110 crore rupees versus a profit of the same amount in the corresponding quarter. Gross NPAs as well have increased significantly. So let's understand that and more with the management of PTC India Financial Services. We have right now with us Mr. Ashok Haldia, the MD and CEO of the company. Mr. Haldia, I'm sure investors are really awaiting clarification from you on the Q4 numbers. What's the reason for this decline on the NII front, and what's the reason for the loss coming by in the bottom line? If you could just sum up Q4 for us.
Firstly, let me tell you about the growth or the performance of the company during the quarter and the year. If you look at in terms of the portfolio growth, that has been more than 20%. And if you look at the interest income, spread and the margin, those have remained stable. You talked about the net interest income, but that has not been declined to the extent of 31%, what you are saying, as per the facts. The NII has been 31% of the total revenue and indicates towards the continuing profitability of the organization. If you look at the profit before tax and the provisioning, that has been of the order of 467 crores. And we have been able to diversify it in the non-power sector area, particularly roads and ports, in a very significant manner. What has really impacted the profitability of the quarter and the year is the incremental provisioning that we were required to make because of the RBI circular, particularly in case of the consortium cases. 3 of our hydropower projects, which were under the advanced stage of OSDR, they were to be taken out of that and put under to the NPA category. And these projects, 2 of them are now moving to NCLT, and one of the projects where we have a more than satisfactory level of collaterals, we expect to resolve in the current quarter. Now, there has been increase in the NPAs, but the NPA resolution has been moving very fast. If you recall, I had told in the earlier interviews that we would resolve at least 3 to 4 accounts by the end of the Q1 current year. And we are in the progress of doing that through the NCLT and through the ARCs, and possibly we might be first of the institutions, financial institution, would be able to resolve a case through the NCLT. So there has been a significant process, and let me also add that the overall stress in our book remains the same, which was at the beginning of the financial year, that was 1st April 2017. We expect to resolve out of 30 to 40% of those, particularly all those cases where we were the lead lenders or we were the sole lenders, by the end of the Q2 or at most Q3. But by the end of the Q1, we should be expect to resolve 3 to 4 of such accounts. So resolution is moving at a very fast pace. And as we see the sector and the impetus that's going to be placed on the
PTC India Financial Services, as well as her wealth creation idea, which is GSFC. Let's reconnect with Mr. Haldia. Mr. Haldia, I, taken into consideration all those details that you gave us, but while the outstanding loan assets grew, what led to the drop in the net interest income? Has the RBI framework on stressed assets weighed on your provisions in your bottom line? And question is this going to continue?
Yeah, the response to your question is, first, as I said, our spread in the NIM is better than our comparable peers in the industry. Second is that because of these loan accounts which have become NPA during the quarter, whatever the interest accrual that had taken place in respect of those accounts, those were required to reverse back, and that had a significant impact on the quantum of the interest income that we had. So it's not because of our interest income has gone down, it's because of the NPA provisioning that we did and because of the reversal of interest thereon. And let me tell you, as I said, that the spread and the NIM in this particular quarter, though they are better than the peers, but they are low for the reason that for the entire year, we did not give any corporate loan because of the sector-related issues. Now, since there are green shoots in the sector and some of the companies are showing better results, we would give increased emphasis on the corporate loan book. That would increase our yield significantly. So in the coming quarters and the year, we expect that our net interest income and spread would improve far better than what they have been so far. And as I said, we expect to grow maybe in the range of 25-30% as we have been growing in the earlier years. So I would say it's simply a temporary effect because of the legacy stress assets that we are carrying of the thermal and the hydro, and there has been no increase over the last year in the quantum of stress assets that we have on our book.
Right. Mr. Haldia, unfortunately, we are completely out of time, so we won't be able to take the interview forward, but thanks so much for joining us on ET Now and helping